But let's do one thing. Let's move on. Siddhartha Khema, the head retail research at Motilal Oswal, joins in now to talk about some numbers. Siddhartha, hi, good morning. I think the relief has come in on IndusInd Bank with the margins being stable as opposed to the concern that after HDFC Bank, all banks would see margin pressure. But what would you do with IndusInd Bank as a stock now?
Yeah, very good morning, Sonia. So if you look at, I think IndusInd, we are pleased with the numbers. They are in line with our expectations, at least. If you look at the net profit growing 17% to 23 billion, this was aided by a healthy revenue growth as well as lower provisions. Loan growth was healthy at 20%. Traction we saw in both corporate as well as consumer books. Deposits grew was at 13.4%. So overall, the only concern that we see is that there has been some slippages, fresh slippages on a Q&Q basis, mainly in the corporate book. And that too, so the overall corporate book slippages increased to 3.12 billion, and of that, 1.4 billion was put into one large account. And there is some concern on the elevated slippages from the vehicle finance book. But overall, we see that IndusInd continues to report a good inline performance, healthy NII growth, controlled provisions. Asset quality remains quite stable for them. And we are expecting a good growth going forward, 21% earning growth over the next 2 years. ROE should improve. And the healthy provisioning in the MFI portfolio and moderation in the overall slippage run rate should lead to a reduction in credit costs. So that should lead to an ROE of 16%. And hence, we continue to remain very positive on IndusInd. It is one of our preferred picks within the smaller private banks. We have a target price of 1900 and a buy rating on IndusInd.
All right. Siddhartha, stay with us. We'll come back to you for more. I want to get your views on Tata Communication as well, which has done well.
But Siddhartha Khema of Motilal Oswal is still with us. Siddhartha, earlier we were talking about IndusInd Bank's positive performance. What about HDFC Bank? There was large delivery-based selling post the numbers, a lot of disappointment there. But for long-term investors, is this a good time to be buying HDFC Bank, or are you cautious?
So, Sonia, if you look at HDFC, the street's reaction is, to some extent, you can say a bit exaggerated because the large holding that the FIs and DIs have, there is some concern with regards to the NIM compression. The cost to income ratio has gone up definitely. The bigger concern is on the deposits growth. I think that is where the street is most concerned, that if that doesn't pick up, the overall business growth could get hampered. And what we have seen, the provisions which have gone up, including the contingent provisions and last quarter and as well as this quarter, the near-term expectation is not very strong from HDFC. Having said that, you rightly said, if someone is looking at the longer-term picture, the correction does offer a good entry opportunity, but just keeping in mind that one needs to buy this not for the next 1 or 2 quarters, but for at least 2 to 3 years, and things should improve with the overall improvement that we are going to see in the overall credit growth in the banking business, and with the rate cuts that would be expected towards the later half of the year, that should help elevate some concerns on the NIMs, and that is where when I think the stock should start reacting positively.
Siddhartha, do you look at Shalby? They've made an interesting acquisition of a hospital in Gurugram, a hospital which generates about 70% of its revenues from international, patients. So medical tourism, it's a big beneficiary of that, the acquired company. So do you look at Shalby, and any thoughts on this?
So, Rima, we don't look at Shalby. We have not covered that. We cover some of the larger ones like Indian Motilal, the Apollo hospitals, the Medanta and Max. So within that, so overall, we are very positive on the healthcare space. We believe that there is a good growth. Shalby has a niche, as you rightly said, created with the international patients that is doing well. But within our preference, we have Medanta, that is their global healthcare, which is our preferred pick. We also have a positive view on Apollo hospitals as well as Max Healthcare.
By the way, the pre-open is on with us, and it's a strong start. I mean, it was just the first 2 minutes, so things will settle down. It won't be a 250-point higher start, but should be decent. In any case, Siddharth, the Tata Communications, Rima was, of course, speaking with the management earlier. There is an upgrade from IIFL as well, and IIFL is saying that, you know, it's a strong one, especially given the context where everybody else has been reporting weak numbers. Any thoughts, briefly?
Yeah, Prashant. So I think results have been much better than expectations. The good positive surprise was the EBITDA improvement in the subsidiary Kalera that they have acquired. We were expecting a marginal loss. They have reported a strong profitability on the EBITDA front. And with that, we have also upgraded the estimates. So we have raised our estimates to factor in the higher EBITDA run rate. I think numbers are better. The only thing is the stock has also run up and there is some growth visibility. The management has clearly said that they would be looking at growth. They have set a very ambitious target in terms of the next few years for the revenue. So they have a target of 280 billion rupees of revenue by 27, and which would be supported by both organic and inorganic initiatives. So some of these inorganic initiatives that is leading to a higher debt, plus a little bit less in terms of growth visibility. But nonetheless, very strong numbers. Stocks should react positively. We have a neutral rating right now, given that the valuations have a bit on the higher side, and we see limited room for upside, given the only upside that we are looking is for improved growth visibility could be a vital for the re-rating of the stock from here as well.
Siddharth, thank you very much for joining in today.